UK income tax is one of the most important aspects of the country's fiscal system. Every individual earning an income in the UK is required to pay income tax to the government. The tax rate is based on the amount of money you earn, and various tax brackets determine the amount of tax you owe. The income tax system in the UK is complex, making it crucial for individuals to understand their tax obligations and take necessary steps to ensure compliance. Taking advantage of various tax exemptions, allowances and deductions can help reduce your tax liability and maximise your income. And who doesn't want that? Despite the complexity of the system, knowledge of income tax is critical to individuals and businesses, as non-compliance can result in penalties and legal action. The UK taxation system comprises different types of taxes, with income tax being the most significant one. In essence, income tax is a type of tax that you pay on your income, including earnings from employment, self-employment, pensions, and savings income above a certain tax-free threshold. The tax threshold for the year 2023 to 24 is £12,570. Meaning you'll only pay income tax on earnings over this amount. However, your tax liability depends on your income level and how much of it is taxable. The UK has a progressive income tax system with multiple tax bands and rates, and the amount of tax you pay increases with your earnings. It's important to know the rates and allowances of UK income tax. The basic rate of income tax in the UK is currently set at 20%. This is for earnings over the personal allowance of £12,570 and up to £50,270. The higher rate of tax is set at 40%. This is for earnings from £50,271 up to £125,140. There's also a top rate of income tax that is set at 45%, which applies to those who earn over £125,140 per year. Your personal allowance goes down by £1 for every £2 that your adjusted net income is above £100,000. This means your personal allowance is zero if your income is £125,140 or above. If this applies to you, you'll need to do a self-assessment tax return. If you don't usually send a tax return, you need to register by the 5th of October following the tax year that you had the income. There are several allowances that can help reduce your income tax bill, including the personal allowance of £12,570. There are also several other allowances available, such as the marriage allowance and the blind person's allowance, which can help reduce your taxable income and lower your overall income tax bill. It's important to stay up to date with the current rates and allowances to ensure you're paying the correct amount of tax and taking advantage of any available tax breaks. You may be able to claim marriage allowance to reduce your partner's tax if your income is less than the standard personal allowance. If you do not claim marriage allowance and you or your partner were born before the 6th of April 1935, you may be able to claim married couples allowance. You also have tax-free allowances for savings interest and dividend income if you own shares in a company. You may also have tax-free allowances for your first £1,000 of income from self-employment. This is your trading allowance, and your first £1,000 of income from property you rent, unless you're using the rent-a-room scheme. You pay tax on any interest, dividends or income over your allowances. If you're a UK taxpayer and want to know how much income tax you owe, there are several ways to work it out. The easiest way is to use the HMRC online calculator. This tool will calculate your tax liability based on your income, any allowances you're eligible for, and any tax reliefs you may qualify for. You'll need to provide your income details, including any income from self-employment, rental income or foreign income, as well as information on any pensions, savings and benefits you receive. The calculator will then show you how much tax you owe for the tax year, along with a breakdown of the tax bands and rates that apply to your income. Alternatively, you can check your tax code to see how much tax has already been deducted from your income and whether you're due any tax refunds.